This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil, and today's video I'm going to focus on a 3 time frame approach that I think can help improve your consistency. I get a lot of questions about guys wanting to improve their equity line, want it to be more consistent and have fewer drawdowns. I think you have to add an extra trade into your repertoire. Now, this is in my course. I wanted to give another example of it. It's not something I talk about all the time because it is a counter trend trade, but I think it's important to have in your arsenal. So let's go ahead and get into this now. If you're interested in learning more about trend and momentum in multiple time frames, I am offering my book at a discount. And if you go to rabilstockresearch.com/book, you can find out the details. I'm also going to put the link down in the description below. Now, when we talk about consistency, there's 2 ways to do it. One is just stand aside, meaning if the market conditions, and I spend every Friday's video going through the market conditions, trying to be pretty in depth with it. And if the market conditions aren't optimal, then just stand aside. That's an option, and that will improve your equity line. However, if you want to be more active, you want to trade through all types of periods, you want to have a little bit more monthly activity on a regular basis instead of standing aside for a week or two, you want to keep trading, then I do think you need to learn this specific strategy. And I know guys that want to be more active, and so I want to make sure, and there are subscribers of mine, some guys I'm coaching, and I want to make sure I cover this specific strategy because it is something that I have found is really useful because there are times when this is the only trade that's out there. All right, so I've got the chart of XLI up. Now, there's 3 time frames. You got a weekly here, daily here, and hourly here. Now, there's something really specific. Typically, I have all the same look to all these charts, right? And what I've done is something a little bit different this time. On the hourly chart, the slower time frame, I've put the zigzag up. All right, you see how I've outlined the zigzag here? And I do that when I have this 3 time frame approach. I think it helps to be a little bit more consistent because you want to make sure you've got something truly developing on that smaller time frame. And again, this can be done in any 3 time frames. So you could be looking at a monthly, weekly, daily, although I would tell you that this strategy is typically going to be helpful for people who are doing like weekly, daily trades. Like they're looking for longs and they're looking for weekly trends and they're trading it off the daily. If you learn this strategy, this can help you be a little bit more consistent when those long trades aren't quite as prevalent. Okay, so let's start with the weekly chart. So one of the things I want you to make sure you understand, optimally, we would want to see a slowdown in momentum on both the weekly and the daily, right? We want to see ADX just dying out, okay? But that's not typically going to be the case in all market environments. We could have a period where the ADX continues to look good in both time frames, and yet there's this separation between the price here at 110 area and where the 18 is. You see the difference, the distance there? There's a decent amount of distance, and we've gone up for several weeks in a row. So what we're trying to do is capture the potential for a pullback to the 18. That's all we're looking for. Just the pullback to the 18 MA in a long-term uptrend. This could just pull back in here and then go again, okay? So we're not necessarily looking for a reversal. This is so important to understand. It's going to help you be a little bit more nimble about taking your targets. It's going to have you give you a much better idea of how to handle the daily chart and then the hourly. So what we're looking for, in one of the courses in my trading school, I talk a lot about the 4MA, all right, and what's going on with the 4MA. And if you notice here, the 4MA got pretty far away from the 18. You see how it's right here, it's breaking above the 18, and here it gets really stretched away. So we want to be on the lookout for that, especially when it starts to roll over, because when that's rolling over, that's essentially when the 18 on the next lower time frame is rolling over, which is the daily chart. So when we see that, we know we have the potential for some kind of a pullback to trend support. That's what we're trying to capture, is this reversion to the mean trade. All right. Now, what I like to see, and if you notice, the MACD did die out. This went to a new high here, and the MACD was dying out. Even though the ADX was showing strength, green DI and MACD were starting to die out before this peak. All right. We do want to see that kind of transition taking place in the momentum. And I call it transition because it's not necessarily calling for a reversal. Again, we're just looking for a pullback. That's all we're looking for. And on this time frame, I like to see this get give me a sign that it's really breaking the 18, and preferably actually rolling the 18. So the 18 is starting to flatten out here, and then see if we can't get some kind of a signal. And that could be divergence. It could be a pinch play. It could be any number of things. It's normally going to be either divergence or a pinch play. Now, I'm focusing in on the pinch play entry, and it's not exact. Okay, it's not, if you look at it, it had a pretty good rally up to the 18. It didn't really have two higher bottoms, but we broke below, and then we kind of checked back to the 18, and it was failing at the 18. Clearly, these two lines were going down. So to me, this is telling me, this is kind of anchoring the downtrend in the short term and saying there's more downside risk in this right now. And we're failing at the 18. We failed up here once and then failed up again. So don't get too caught up in looking for that two higher lows every single time. It might not happen that way. We know we've got some slowdown in the momentum. We've also got a slowdown in the momentum this way. We're starting to see the sellers gained a little bit more strength. Again, we're not looking for a massive reversal here. We're just looking for enough of a slowdown to get us a pullback. All right, so once we have that in place, we go down to the smaller time frame. And I've outlined this specific ABC to the upside that causes us to be able to draw in our trend line. All right, now, if we look at what's going on in MACD and ADX, you notice how this just worked up to the zero line? This was a clear zero line reversal where we can just draw in our trend line. Very easy to see when you have the zigzag. Okay, if you take that off, it starts to look a little bit more like a hodgepodge of just sideways consolidation. But when I have this up, it's crystal clear that when this trend line was broken, we had a zero line reversal with low ADX. It's definitely a trade you could take somewhere right around breaking 109, maybe a little bit lower. Now look, that 109 is way up here, and we're looking for a move back down to 104. So let's just say here's 109 right about here. And we're looking for a move, say, to 105. Now, again, here's 109, breaking the trend line. You can see the little trend line on the daily that's breaking. And we're already below the 18, and that's rolling over. So this is key. And I show this all the time, especially on Fridays. I'll show this on the S&P, where I'm just looking at the 18s. I'm kind of taking the 40s off the chart. Okay, take the 40s off all these charts and say, what's going on the 18 on this time frame? Well, we've broken it and we're failing at it. Well, what's the target? The target is the 18 on this time frame. All right, ballpark. It's not exact. I'm not necessarily looking for it to go touch that line, but that's the ballpark of what I'm looking for. So I know that once this starts to fail here, I can go and look for a move down to somewhere around 105 area, 104, 105. Well, we got to 105 and a half on this move, and that might be it. And maybe it's going to end up having another move down. I don't know, but I would probably be more inclined to look at my risk reward, look at two ATRs of risk, right? Use your two ATR approach and see if we take two ATRs off the, and I would actually consider doing that off the hourly chart. You could do it either off the daily or the hourly. It really is up to you. There's no right or wrong in this. I mean, if you do it off the daily, you're not going to hit as many targets. If you do it off the hourly, you could hit several targets and you could turn it into a massive win. So figure out what makes sense to you. One thing I would tell you is that if I'm going to do this trade at 109, I probably want to make sure that 2 ATRs on the hourly is going to give me at least room up to the 18 on the daily chart, meaning I don't want to get stopped out inside of let's say I put a trade on here at 109 and the 2 ATRs has a stop at here below the 18. Well, that doesn't make a lot of sense to me. So I want to make sure I'm outside, the stop goes outside of the 18, and preferably by using 2 ATRs on the hourly, you're going to get that done. Now, there was a second option. If you didn't want to take the trend line break, you could have waited for this to make a lower high here and then done the same thing. Use 2 ATRs to give it a little bit of room. Make sure you stay outside the 18 as a starting point, and then I think you're home free from there. So if you think about it, if we do the trade at, let's say we only got 108.75 and our stop is, let's say, 109.60, we're not risking that much to get to 105. I mean, even at 105.5, we've hit a couple of targets, maybe even 2 or 3 targets, and we want to make sure we can get 2 times our risk. All right, 2 times our risk is our minimum entry point or a target point for a trade. So if the 18 on the next higher time frame weekly is only given to 107 and I'm at 108 here, this is a little tight. I might not be able to take this trade. I got to have enough room to have it to make sense. All right, so this is how I use this 3 time frame pattern. If you notice, the 4 on this time frame is essentially framing out what we're looking for on a move down to the here, and that 4 on the higher time frame is the 18 on this time frame. Once we get that rolling, now we have room to the next time frame. All right, now it is preferable to have a target area, maybe 1 target. So if we go 1 times our risk, we prefer, it doesn't have to be this way, but it'd be nice to be able to take a target at the 40, just in case the 40 ends up providing some support in the interim before it breaks through. It's nice to have that, but it's not essential. It's not essential. A lot of times it'll play out that way for you. So you could take a partial profit at 1R, take another one at 2, and maybe the target is actually at 3R here. And so that's not a bad way to handle the trade, but manage it off the hourly if you can. Get that thing moving in the right direction. In this case, because of the gap down, you would have been taking targets probably pretty quick, and been able to go to a break even and then go and hit some more targets along the way. So I hope this makes sense. Let me know if you have any questions or comments. Thanks.